when the world's most valuable commodity surges to levels not seen in weeks, and the dollar weakens at the same moment a major court decision reshapes trade policy. You're witnessing more than just market fluctuations. You're seeing how legal rulings, geopolitical tensions, and investor psychology intersect in ways that move billions of dollars within hours. Gold just hit a price point that tells a story about uncertainty, currency dynamics, and what happens when the rules of global trade suddenly change. Over the weekend, the Supreme Court delivered a landmark ruling that struck down a significant portion of tariffs that had been imposed under emergency PO. Worse, these weren't minor adjustments to trade policy. They were sweeping duties that affected imports from countries around the world, fundamentally altering the cost structure for businesses and consumers alike. When that legal framework collapsed, it sent ripples through multiple asset classes. Simultaneously, the dollar weakened, and gold, that ancient safe haven investors turn to when certainty evaporates, climbed over 1% to reach heights not touched in more than 3 weeks. Understanding why gold moves the way it does requires looking at how investors think about risk and value. Gold doesn't generate dividends or interest. Its value comes from being a store of wealth when other assets feel unstable. When currencies weaken, gold becomes more attractive because it takes more of that weakened currency to buy the same amount of metal. When legal and policy frameworks shift unpredictably, gold becomes attractive because it exists outside those frameworks. It's no one's liability, holding value regardless of what courts decide or governments decree. The dollar's decline following the Supreme Court decision reflects a specific calculation traders made to what striking down those tariffs means for the global economy. Tariffs increase costs, which can slow growth and push inflation higher. Removing them should reduce inflationary pressure and support broader economic expansion. A stronger global economy reduces demand for dollars as a safe haven, so the dollar fell. And as it fell, gold priced in dollars became more attractive. But the court's decision didn't just remove tariffs. It weakened the executive branch's ability to impose trade restrictions quickly using emergency authority. For months, businesses and trade partners have been operating in an environment where tariff threats could materialize rapidly, forcing companies to adjust supply chains and strategy on short notice. The ruling constrains how tariffs can be implemented. That should reduce uncertainty. Yet markets aren't reacting as if uncertainty disappeared. They're reacting as if one type of uncertainty got replaced with another. The trade representative went on record saying countries with existing trade agreements haven't indicated plans to withdraw following the court's decision. That suggests the diplomatic relationships built around those tariffs might persist even as the legal foundation shifts. But it also raises questions. If the tariff structure changes significantly, do those agreements still make sense? What happens during the period between the old framework collapsing and any new framework being established? Into this already complex situation, add geopolitical tensions in the Middle East. Iran has signaled willingness to make concessions on its nuclear program in exchange for sanctions relief. That's movement on a front that's been frozen for years. But it's fragile. Negotiations could collapse. And when the possibility of military confrontation exists, even if remote, investors shift toward assets they consider safe. Gold is always near the top of that list. Markets in mainland China were closed for Lunar New Year holidays when gold made this move. That means lower trading volumes than normal and potentially more volatile price swings. Chinese buyers represent a significant portion of global gold demand, so their absence affects how prices move. Trading resumes shortly, and we'll see whether Chinese investors validate these price levels or push back. Other precious metals moved alongside gold. Silver climbed over 3%. Platinum and palladium both posted gains. When multiple metals in this category move together, it usually signals broader investor sentiment about risk and currency dynamic rather than factors specific to any single commodity. Economic data released around the same time added another layer. Fourth quarter growth came in weaker than expected, with government spending showing its sharpest decline since the early 70s, but consumer and business spending remained steady, suggesting underlying economic resilience despite the headline weakness. Markets currently expect 3/4-point interest rate cuts this year. Lower rates typically support gold prices because they reduce the opportunity cost of holding non-yielding assets. What makes this particularly significant is what it reveals about how markets process institutional change. The Supreme Court ruling should reduce policy uncertainty by clarifying the limits of executive authority on trade. But, in practice, it's creating a transition period where the old rules no longer apply and new ones haven't fully formed. During transitions, even ones meant to improve stability, markets often become more nervous rather than less. That's what you're seeing reflected in gold's movement. Looking ahead, several factors will determine whether gold maintains these levels. How quickly do alternative trade frameworks get established? Do Middle East negotiations progress or deteriorate? When Chinese markets reopen, do buyers step in or step back? And critically, how does the Federal Reserve interpret all these crosscurrents when making decisions about interest rates? If they cut rates as markets expect, gold likely maintains support. If economic data forces them to pause, gold could face pressure. Here's the takeaway. When gold surges and the dollar falls on the same day a major legal ruling reshapes trade policy, you're not just seeing commodity price movements. You're seeing how investors process fundamental shifts in the rules that govern global commerce. The markets are telling you something about uncertainty, transitions, and where people put their money when the ground beneath them shifts. For coverage that connects market movements to the deeper forces driving them, subscribe to Allura Updates, because understanding what gold prices really mean is how you see beyond the numbers to the story underneath.